Hi. How you doing? My name is Daryl. I have a question actually for the whole panel. When it comes to looking at potential founders for capital, and this is Black Men Talk, so we're talking about Black people. So at the end of the day, it's about what type of specific due diligence is required by you guys, specifics that will help these brothers get funded. Because I understand that I've been in the journey. I've bootstrapped my company for 2 years, and I will continue to do that. So until that happens, if it does, what does it take for these brothers specifically to get funding when it comes to due diligence?
I can take that. And now let me just further let me further understand the question. You're saying from a business standpoint?
VC perspective, what do these brothers need to do specifically when it comes to due diligence? What type of due diligence specifically needs to be? Are you guys evaluating from us so that we know we need to put our stuff together?
Oh,
So
okay.
we can,
What's on
we
the
can get
checklist?
Yeah, what's the checklist?
Thank you.
That's helpful. That's helpful. So, I mean, really, it's obviously different groups will have different processes. So it's good that you asked it to the whole panel. But as far as us knowing that we are a follow-on investor, typically the more lengthy due diligence, potentially from like a 500 startups type VC, would have already been done. So for us, we're really doing a 1 to 3 week deep dive over 2 to 3 meetings, understanding all aspects of the business. There'd be a data room that's compiled with all the documents and supporting materials that basically give a view into the company. So that's financials, growth strategy, marketing strategy. All these documents that give a full view of the company is what we expect to go through during this due diligence period. And more pointed advice would be as upfront after you've qualified the individual and you know that they are legit. Just be very upfront and provide as much information as you can from the very beginning, because that will basically show the investor that you've put your best foot forward. And if there are more documents that need to be generated after that, that comes from conversation from what you already have.
Great.
And I'll just say from a Republic perspective, what we're looking for, since most companies that are raising on our platform are earlier, we're looking at the teams to really understand like what is your expertise in this space and how are you specifically positioned to tackle the problem that you're looking to solve. We're looking for traction points, so that could be in the form of revenues or profits. But if it's not, we're looking for specific data points that show your growth, either month over month or year over year. So really being kind of like strategic with how you're managing your financials, even from the earliest standpoints of the business, go a long way in terms of convincing people that you have the ability to kind of get to where you do want to be. And then I guess because we're in a unique position where community does play a big role, having indicators of that, whether it be social media, a newsletter, a listserv, that has a large and engaged following that wants to kind of see you guys grow. That's another thing that we're looking for as well to kind of get people over that hurdle at an early stage.
I would also add that it's important to be very precise in whatever you share. And so when somebody asks you what your metrics are or your market size, don't give a hand-wavy answer that it's about this number or I've spent about this much. Be down to the cent if you can. Have that level of granularity because it gives people confidence that you're in control. And unfortunately, I think it's an uphill battle, again, going back to why we're here, for minorities to have to prove themselves. And the more you're in control, the less people have doubt. And take every single fundraising opportunity as a learning opportunity. When somebody passes you up, ask them why. And then answer that question, put it in your data room, and lean into it for the next conversation. So it shouldn't be brought up by the investor. You should already be saying, I know this is probably what you're thinking, and this is how we're going to go solve it. And if you can do that, you're in control of the conversation the entire way.
For us, the process is a little bit different. We don't do a deep due diligence because our investments are tied to the accelerator. So it's mainly the accelerator program's acceptance program process. We, of course, ask for a pitch deck. We ask for metrics. But we do have several interviews in place with different people. And when you're applying, you're going to think, why am I hearing the same questions over and over again? don't they talk to each other? We actually do this on purpose. We're testing for focus. We want to make sure that you know your messaging. We're going to ask you about metrics, and you need to know them on the spot. But you need to be consistent, and I think this is also applicable for VC because you're going to have different conversations at different points. So be very strategic and be very intentional about your messaging.
I just want to give, again, some like very specific hacks. You want to look for venture capital firms that do not do unanimous votes. That is a smaller number, but it's important. The research shows that founders of color have a harder time getting approvals from unanimous votes because there's always one hater. And that person's like, I just can't get comfortable with the black guy's deal. I don't know, you know? I don't know what it is, right? Yeah, thanks, Bob. But because when you're an early stage investor, and we could all say every one of those companies has warts. You could find a reason not to invest in every portfolio company. So like GV, it's the partner and the CEO of the GV firm that they decide. They go in a room, two people, they decide together. And surprisingly, they have a more diverse lineup than other folks, right? So think about ask about how they make these decisions. I think that's also kind of really important. Also, a specific thing for you, in the financial model, use the comment section in certain areas to explain seasonality, to explain why it's high or low here. If you can feed them, we'll get into this a little later, but neocortex versus limbic system, you can feed them the answer that they read on the screen. It's like, oh, look, I found a comment. I found that myself. Like, that's the reason why. Like, they're, you know, you put it there for them, but it means a lot. As opposed to like, I don't know what's going on there, and they imagine a variety of problems instead of you telling them what the seasonality really means.
Can I just add one more thing, and specific to your question? Don't be afraid of due diligence. Think of investing as like dating and marriage. If somebody gives you a term sheet without actually asking the right questions, that's the wrong partner for you, because things are going to come down the line, and you're going to hit a speed bump in the road, and they're not going to be the partner that you thought they were. And over-disclose in your data site. Be upfront, warts and all, because these are the people who are going to be helping you work through the problems in the future. And that establishes trust right off the bat as well.
Pastor came today, didn't he? The pastor came today? You know, sometimes it's on.